Did you know you could be leaving thousands of dollars on the table every tax season? Today, we're rediving into the top IRS tax credits and deductions that millions of Americans miss every year. These aren't loopholes. These are legitimate legal ways to reduce your tax bill or even increase your refund. Let's start with one of the most overlooked benefits, the Saver's Credit. If you contributed to a retirement account like a 401 or IRA, you may qualify for a credit of up to $1,000 or $2,000 if married filing jointly. To qualify, you must be over 18, not a full-time student, not claimed as a dependent, and fall within specific income limits. For 2025, the limits are $39,500 for single filers, $59,250 for head of household, and $79,000 for married filing jointly. Depending on your income, you can get a 10%, 20%, or 50% credit on the first $2,000 you contribute. That's free money for saving your own money. Next, let's talk about the child tax credit. If you have kids under age 17, you could claim up to $2,000 per child. This credit begins to phase out once your income exceeds $200,000 as a single filer or $400,000 if married filing jointly. Even better if your credit exceeds your tax owed. You might be eligible for a refund of up to $1,700 per child through the additional child tax credit. Got dependents over 17? You may also qualify for a $500 non-refundable credit. Now let's shift to education benefits. First, the American Opportunity Tax Credit, or AOTC. This credit gives you up to $2,500 per student for the first 4 years of higher education. Even if you owe no taxes, 40% of that amount, up to $1,000, is refundable. To be eligible, your income must be under $80,000 if single, or $160,000 if filing jointly. Then there's the Lifetime Learning Credit. It offers up to $2,000 per return, not per student hand. It applies to any post-secondary education, including job skills courses. This credit is non-refundable, but still valuable. If you're repaying student loans, don't forget the Student Loan Interest Deduction. You can deduct up to $2,500 in interest paid on qualifying student loans. This applies even if someone else paid the interest, as long as you're legally responsible for the loan and not claimed as a dependent. Now let's talk about the Child Independent Care Credit. If you paid someone to care for a child under 13 or a disabled adult dependent while you worked or looked for work, it may qualify. You can claim up to 35% of up to $3,000 in expenses for one person, or $6,000 for two or more. That's a maximum credit of $1,050 or $2,100. This credit decreases as your income increases, but it's still worth checking. Another powerful credit is the Earned Income Tax Credit, or EITC. This is one of the largest refundable credits available. In 2025, you could receive up to $8,046 depending on your income and how many children you have. Even if you have no kids, you might still qualify for a smaller credit if your income is low enough. Many people don't claim this simply because they don't know they're eligible. Now let's touch on education savings specifically. 529 plans. These accounts allow you to save for education with tax-free growth and tax-free withdrawals when used for qualified expenses. You can even use up to $10,000 per year for K-12 tuition or for student loan repayments. Some states also offer tax deductions or credits for contributions to 529 plans. If you're a freelancer or business owner, you may be able to deduct business-related expenses such as home office costs, software, travel, and supplies. Keep accurate records and consult a tax professional to maximize these deductions legally. Don't forget about the standard deduction. For 2025, the standard deduction is expected to be around $14,000 for single filers and $28,000 for married couples. But if your itemized deductions, like mortgage interest, property taxes, and charitable donations, are higher, you can claim those instead. Now let's do a quick recap. Saver's Credit, up to $1,000. Child Tax Credit, up to $2,000 per child. American Opportunity Credit, up to $2,500 per student. Lifetime Learning Credit, up to $2,000 per return. Student loan interest. Deduct up to $2,500. Child Independent Care Credit, up to $2,100 earned income tax credit, to $8,000 refundable. 529 plans. Tax-free education savings with possible state tax benefits. Business deductions. Write off real expenses if self-employed. Standard versus itemized deduction. Choose what saves you more. These tax benefits can easily add up to thousands of dollars if used correctly. But remember, every situation is different. Always check the IRS website or speak to a licensed tax professional before filing.
Thanks for watching.
If you found this video helpful, give it a like. Share it with someone who might benefit, and subscribe for more tax-saving tips every week. Stay smart, stay informed. See you in the next video.